Do you see this quarter as, and certainly this conversation was, I think, more at the fore last week ahead of the Fed meeting, but do you see this quarter as peak inflation still, or do you see it as inflation is going to shift to more of the services part of the economy?
I think, first of all, I think this has been just a counter trend week. I think next week we've got lots of Fed speakers. 14, I think, are scheduled to speak. And where I think they're likely to tone down the hawkish interpretation by the markets. It's far from clear. The market's made up its mind about what the Fed is up to. Just look at the moves in yields since the last Fed meeting. I think that the Fed's message has been interpreted in the context of surging CPI, but that's old news. Dom just showed us how price pressures are already easing for raw materials prices, but they're already easing in terms of supply chain bottlenecks. I've been watching the ports of Los Angeles and Long Beach and how many container ships are waiting to be unloaded. That was over 40 just back a few months ago. It dropped to 30 at the end of April, 20 at the end of May. I counted 9 ships this morning waiting to be unloaded. It's never zero. We've really gotten past this supply chain blockage. The logjam is breaking. I think those lower price pressures will bleed through by the time of the Jackson Hole conference. I think some of the market's worries about the rise in price pressures will begin to fade.
Margie, I want to get your take on the markets here, especially when you see financials under pressure, despite the fact that we're having conversations about interest rate hikes that could, at least according to Bullard this morning, start as soon as next year.
Well, I think it's really just this big macro trade where people are swinging traders from one sector to another, searching for a theme. What I think is going to be more important is, one, I don't think interest rates are going to do anything. Bullard can say that, but the Fed is pretty clear about what their target is, which is really no changes for almost 2 years. What I think will be more important in a few weeks, we'll be starting second quarter earnings results, and that will really tell the market which way they want to go. And I think it'll show lower inflation and more muted growth.
Hey, Jeff, do you agree with Cramer's view that, okay, you could have a bit of a June swoon, seasonally it's not so great, but after that you could have a nice move in the market, July through the end of the year? Right? I mean, David Tepper telling us yesterday he thinks the stock market is still okay for right now. What do you think?
I agree, Scott. I think that we've still got a lot of cyclical momentum here. In fact, I'd note that while we may be peaking in terms of the rate of growth in the U.S. for earnings and economic activity here in the second quarter, as we look out to Q3, we haven't hit that peak yet for Europe, and Europe is a major global economy. There's a tremendous amount of pent-up demand among consumers in Europe. Their savings rates are up at 20%. That was forced because of all the lockdowns. Those lockdowns are now going away. So the second half of this year, we've got one of the world's biggest economy coming back with a massive amount of pent-up demand. I think that can do a lot for earnings and continue to sustain strong growth momentum throughout the second half of the year. So yeah, I still think that cyclicals, value stocks can come back and still be a good place to find some alpha.
Margie, you're talking about earnings being a potential catalyst. I'm just wondering if, even if companies deliver good numbers, if all the CEOs come out and they still are talking about inflation and it remains an open question, isn't that a bit of a risk to that next leg higher in the market if we get fixated on this inflation question until we can have some more evidence that it's truly transitory?
Well, it is. The CEOs I've heard so far throw in inflation just as one of those factors, but they also seem to say just as strongly as they expect to recover any cost pressures through raising their own prices or productivity improvements. So we don't think inflation is going to be a big deal on earnings. We think that those sectors, those companies that have sustained earnings growth will at least produce a modest return. We're thinking mid to high single digit, maybe double digit over the balance of the year from the market, from those companies that can produce the earnings.
Shepard Smith here. Thanks for watching CNBC on YouTube.